Alright, now my VTF screen share is taking a while to come on. Some technical difficulties here, but we should be up in a minute. There we go. Alright, I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. It's up that is SunPower and AMD. Entered a little SPY short into the close. Market into resistance. All right. Okay, let's go to the charts. What is going on with Snowflake? Down 28% right now? Whoo! Not good earnings. That margin number looked like it was no good. Oh man, that EPS number's terrible. How's it off by that much? They reported a loss of 43 cents a share when they were expecting 3 cents. Oh, Felipe, maybe we should have kept Q short instead of SPY short, man. We went to the wrong one. Yeah, those snow numbers are not good. What's CHPT doing? Up. Charge point. That was actually on the radar for today for a trade. But then Jerry let us know that they have earnings after the close. It was good information, so we didn't go to it. We got Splunk here reporting SPLK. They look like they're all over the place. Now down a little bit. MGM with a new $2 billion buyback. So many buybacks this earnings season. Billions and billions and billions of dollars of buybacks. MGM. Anything else? Any other interesting ones today? Okta. Okta looks like it's trading down also. Okay, let's jump into the heart of the meeting here. S&P closed up 1.25%. Nice green day. Qs are up 1.5%. IWM is up 2.3%. So the SPYs were, looks like the most relatively weak here. Yeah, so let's, I guess, start with our daily technicals, kind of like we do typically here. So SPYs, I've been talking about this even on this first day here. The spot to potentially look to short, the resistance I'm looking at is upper 430s into 440, and 440 is a really big line in the sand here. I think if the S&P, the SPYs are able to get back above 440, if this market goes from bearish to neutral, and you know, short time frame here, ever since this kind of capitulation low, bulls have been in control, but kind of bigger picture here, we're in a downtrend, bears are in control. So as we retest 440, which was an important support area that we broke down from into the end of February, the question is, does that hold as resistance? The 21 EMA is there as well. Do we get a lower high into 440 that then continues our downtrend? Or is this market actually able to clear up above 440 and get kind of back to a more neutral tone? And it was a pretty strong day today. We can look at the 5-minute chart. We had a technical common gap to the upside. That common gap never got filled, even though there's decent high probability of common gaps getting filled. It never got filled in the SPYs, but it sure got filled in the Qs. Qs actually were able to tick negative at one point, and the IWM not even close. IWM is really strong. I remember this, so we had a common gap up, and then this 10:05 candle came in that was very concerning. This is a negative Maribozu candlestick here. This is when the Qs were filling their gap. SPYs were making new lows in the day. Technically, it was a 15-minute correction, but it was a 15-minute correction into new lows in a bearish market that had a common gap up. So at this point, I kind of thought that the market was a little bit left for dead for the day, and then we probably would continue to bleed our way down and fill the gap. And then we got saved by the Jerome Powell comments today, even though I didn't think that he said anything that was unusual. I guess the market was still pricing in more of a 50 basis point hike for March than I thought. I've been saying from the beginning, even when the odds were really in favor of a 50% basis point hike in March, the market was pricing that in at one point. I always thought it was going to be 25, and it seemed like Powell almost said that that's what's definitely going to happen. Yeah, he did kind of thread the needle pretty well here on his comments to provide just the right accommodative type statements, and it was weird. I'm trying to remember. One of you guys had a funny comment. A little bit after that, he then made more of a hawkish comment again, and then somebody made a comment that was like, he's the most hawkish dove ever, or dovish hawk, or something like that. That I thought was funny, because it was like he said something about how we're going to take our time on these interest rate hikes, 25 basis points, maybe not even 25 basis points. It almost seemed like there for a heartbeat, and then was right away talking about how they're ready to do 50 basis point hikes as needed, which caused the market to downtick a little bit, but then we rallied right back up. So that was really the tone change there for the market, where it looked like it was a high probability, especially post this 10:05 a.m. bar, that the market was going to fill a gap. I kind of was thrown in the towel for the day almost for myself, for my own trading. And then Powell comes in, we negate the negative Mariposa, and that turns into a strong uptrend, where we then, by the end of the day, retest the 440 resistance that I keep talking about. And that's where I decided to really kind of make myself a good bit more neutral here. I sold some of my longs a little bit right into the close here, right into this uptick, and then I shorted the SPYs, which I said I was kind of, the plan was I was just going to hit some SPYs around 439 or so, and if we ended up, kind of selling off in the last 10 minutes and closing a little weaker, I would keep that as a portfolio hedge. But if we closed at highs, I would just, exit the position. So I ended up keeping that because of this little sell-off here in the last 5 minutes, and we'll see if that proves to be a good idea or not as this market kind of closes into resistance. Let's take a quick look at the Qs in the IWM. Qs, similar story here. 350 is the spot for the Qs. Qs got to get above 350, and I think they go from bearish to neutral. And the IWM here, the IWM already is neutral, above 200 bucks. And honestly, the IWM starts to become bullish on a closing basis above 207. The Russell, it's funny because the Russell's really what led us lower initially, has been holding up really well. It held up really well for the most part in February, and it's been stronger than the SPYs, it's been stronger than the Qs, and it's still showing that strength right now, up 2.4% on the day. So really interesting move here for the market. As far as trading goes today, I did not think I traded very well. Let me kind of find my spreadsheet. Most of the things that I was looking at never triggered. Where is my spreadsheet here? Why does it say view only and it's not updated? It's so weird. Sorry, give me a second here. I just want to find this document that had my morning ideas on it, which is not loading properly. Alright, I'm not going to be able to get it up unless I turn my whole screen share off again, which I'm not going to do. But I, for the most part, remember, I had a bunch of stuff on my radar. Most of it never triggered. Energy was really strong. Growth was relatively weak. So as far as energy goes, I've been involved in Oxy and Apache for almost the entire month of February. Did really well with them. And then obviously this move here, this now 4-day move in the indices was fantastic. I liquidated those positions this morning just because of my extension rules. These stocks got really extended, particularly Oxy got really extended here. And I still want to be long these stocks, but this is just a great opportunity to be able to book some profit after we've caught a really nice move in these trades. Kind of reassess and see how the market handles the extension. Like I said in the morning meeting, just because it's extended, today was day 3, doesn't mean that it couldn't have a really strong momentum day 3, especially with all the geopolitical stuff that's kind of going on. But I'm looking at, that this Oxy's extended by $5 and a $45 stock, extended from the ADMA by over 10% is really kind of how I'm measuring that. That's just a lot. So I want to see a time or price correction come into these things, and then I'll look to enter. And I'll look to enter fairly aggressively as far as pricing goes. Like I probably, even though this ADMA is all the way down here at 43 bucks or so at this point, I probably would look to start buying as early as maybe even as early as $46, depending on how it's looking. So even that, I'd be rebuying the stock in an extended area, or at least starting to nibble again. It's just, and that just goes to show you how much I actually like these names. I do want to be involved in them. But this 3-day move here was just huge. I know a bunch of us on the team have been involved in these things, and they've turned out to be, you know, fantastic trades for us. So great job there. I liquidated those positions. And then I actually tried to short ExxonMobil today, which I didn't have the conviction really to really stick with it and fight it, just because, again, I like these companies. Exxon, I don't think, is the best in breed right now because of its international exposure and its Russia exposure. That's one of the reasons why I went to it. And Chevron had gotten upgraded this morning, so I didn't want to go to Chevron. Honestly, I was kicking myself for not shorting Oxy early on in the day, because Oxy early on showed relative weakness compared to the other names in the sector. Look at the 5-minute chart of Oxy pulling back on that second bar versus your Chevron, versus your ExxonMobil, versus your Apache. We're all holding in significantly better. I even communicated into the VTF. I just struggled to pull the trigger on the trade, and then when Exxon got even more extended, someone on the team, it might have been Urjo, called out this little 5-minute doji here in Chevron, which I think also kind of indicated a little price or time correction might come in, and it really kind of turned into a big time correction after one more boost here. Chevron was not the one I wanted to go to, like I just said, because of the upgrade. So I tried to short as a small time frame trade in this Exxon. It turned out to be a break-even trade. I kind of shorted into this candle here as it was forming. This downtick was enough for me to cover my risk. I got stopped out when a new high actually came in. So I was kind of just off the high of the day, and then it was this kind of king-queen top came in on the 5-minute chart, which I also communicated into the VTF, but I didn't execute it. And then that was actually the real price correction. I just don't have my conviction on the energy names is to the long side. So taking them to the short is just a pure technical extension trade, as these things are almost kind of going parabolic. But because my bias is really to the long side of these, very difficult for me to actually stick with that trade. So I tried ExxonMobil once. It was a break-even trade. I didn't try it again. It ended up rolling over, making new lows of the day. But it closed okay. So at the end of the day here, these energy stocks do have dojis for the most part. This Apache doji isn't great. It signals what I'm already looking for, which is time or price correction. The ExxonMobil candle is even worse, but it's not as extended. The Chevron candle is just fine. Again, Chevron had a really nice upgrade this morning, though it is notable that that volume is escalating, but there's no shorting signal at all in Chevron. The Oxy candle is also a bit of just a kind of a regular doji up here, like a confusion doji almost. That shows that there is still demand in this thing for sure, but just super extended. So you know, we'll keep an eye on these XLE in the stratosphere a little bit also, but that's after a month-long consolidation. There's definitely room for these energy stocks to run a little bit, but Oxy and Apache, which were the ones I was in, just so extended. I said, you know what? Let me take my profit. Let me reassess. I'll look to get in when they're no longer extended. So I did that. When you guys put Penn on my radar today, which I lost some money in, it was a very small loss, and you know, not saying it was anybody else's fault except my own for being involved in it, but I liked the setup. Good relative strength. We know 50 bucks is an important level on a closing basis. We've got that close above 50 bucks. Inside day yesterday, so looking for that inside day and up, and it triggered very early. I actually bought the stock before it technically opened for trading on the New York Stock Exchange. Just so you guys know, I think everyone does know this, not every stock on the market opens at 9:30. Every stock on the NASDAQ opens at 9:30, but stocks on the New York Stock Exchange open up at 9:30 or sometime thereafter, depending upon when the, what do they call it? Specialists or NASDAQ, right? What do they call the guys who are on the floor of the exchange? Someone who just took the 57 should be able to answer that for me. I know they got a slightly different name. But whatever, basically the specialist for that stock on the New York Stock Exchange decides to open it usually at some point right after 9:30 for actual trading. So when I got triggered into this thing, it hadn't actually opened yet. I just kind of jumped the gun and bought through really 51.50. Felipe traded a little bit safer to me than me. He kind of was able to get a dip, and I got stopped out when new lows came in, which was above the equilibrium area, and then it pivoted equilibrium, and it gave this great looking 5-minute bar, even though no confirming volume. And I was like, oh man, they probably just shook me out, but it is what it is. I didn't. The designated market maker. Thank you, Sean. That's what I thought. And thank you, Shoaib. And then there was just kind of no follow through on the upside on that. So it took a small loss in Penn. The ExxonMobil was a break even trade, and then honestly, I just felt like I think this is important to know yourself as a trader. I think it's very important actually to know yourself as a trader. And I just didn't feel like I was properly in tune with the market today. So because of that, I told myself, and I think I said it out loud in the VTF, I was like, you know what? I'm just going to take a step back. Like, I just don't feel like I'm in tune with the market. I took this little loss in Penn. I'm like, fighting these super strong names that I prefer to be long, even though, you might have been able to make a few dollars to the short side on day trades and some of these oil stocks. That's just very hard trading. I didn't have anything that I really had conviction on. There were a couple growth stocks that I thought had interesting setups that never triggered. So I never got in them. Like Plug, if it broke yesterday's high, could have been a momentum trade there. Roblox, if it broke yesterday's high, could have been a momentum trade back to $60 there. Those didn't trigger. Square through yesterday's high, but I noted in the morning meeting the degree of extension was a potential problem there, but that never triggered. So the things I kind of had on my radar in the morning meeting, for the most part, they didn't trigger. Felt like I just wasn't properly in tune with the market. Did not like that 10.05 negative Mariposa that kind of came into the SPYs. And then obviously, we had a news event that negated that. So I just decided to take a step back. And I traded less. And that's okay. As a matter of fact, it's a good thing to do that when you feel like you're not properly in tune with the market. And that's what I did. And that's really all I got. Probably one of the best things I was able to do was just whack some SPYs into the close like that. Bed Bath & Beyond was another one that was on the radar that, it was kind of grinding higher here. I talked about a buy somewhere between 17 and 17.50 is what I said in the morning meeting today. But if it looks right, it just never looked right on the intraday to take a real ad. Look how low the volume is today. One of the lowest volume Bed Bath & Beyond days that things had in a while. And it's an inside day. And as a Bed Bath & Beyond bull, that's actually a good thing. I'm happy to have this inside day because this is a potential execution setup for tomorrow and a stock that I like that's above resistance and has a ton of bull flow was coming in yesterday. We saw a little bit more bull flow kind of hit today on it. We saw Nordstrom have a really strong day, so I thought maybe that could give some other retail names a little bit of juice. But Bed Bath & Beyond has kind of tended to be in its own world. And yeah, that's pretty much it. That's pretty much all I got. So happy to take a look at. Did Macy's Beast today also as a secondary? Yeah, big day for Macy's. Right back into its range. Macy's looked like it was having a breakdown here. I guess when the whole market was about to break down, and it just bid right back up, back into the range. The area between $27 and $28 in Macy's, I think, is still really important. Cool. So that's all I got. Happy to take a look at any questions that you guys have here. Gabriel letting me know that solar stocks are weak due to First Solar having supply chain issues and rising costs that will hurt them. Yeah, so I guess we had this SunPower trade a couple days ago that I was in. Good rest day yesterday. Showed some weakness today. Initially, that stopped me out. Did it close okay, though? Is that tail real? Yeah, it actually closed okay. So this chart actually doesn't look too bad to me. It still gave the close above the $17 area that it broke out from. It just tailed below it just to shake people like me out. So, but that's actually information that you want to pay attention to. Because when people, like me, get shaken out of a trade, it actually makes it even easier for the stock to go up. So we'll keep an eye on solar here. What did First Solar do? They bid that First Solar up pretty well. off that gap down on that information though. It's good stuff. We had Box just report earnings. What's Box doing? Box, there you go. There's a decent one. Cool. What else? Gold building out a nice bull flag on the weekly. Yeah, so we should pay attention to these miners. GDX has been looking really good for a while. I think we called out a trade in GDX on this day right here, where it didn't close well, so I don't know if people really would have kept that as a swing. But then, of course, now you're getting your continuations. A lot of that's geopolitical. I liked when that Russia headline came out that said that they were trying to buy gold, just for these kind of miners in general here. Another inside day for GDX that's worth paying attention to. And yeah, gold, the chart gold here, I think it's Rand Gold, right? Yeah, oh no, it's Barrick Gold. Barrick Gold building out a really nice bull flag here, so we'll pay attention to that one also. If GDX breaks up and gold here gets above 23.50, there could be a good trade. Josh has been looking at this Sono for a while. Sono had a pretty good close today, sure. 27.50, clearing above that is solid. Microsoft was on my radar today as a trade through 300, which I ended up not taking that trade. My alert first went off at this point. I think Microsoft looks great overall. It's kind of, Microsoft is probably my favorite FANG stock right now. I do like Apple also, but Apple needs to prove itself a little bit. We spoke about how Apple needs a close above really above this 21 EMA. 170 is the big level for Apple. But more recently here, I guess a close above like 166 would be a good thing, and close kind of right at it. Microsoft though, like if the Apple level of 170 to me is equivalent to the Microsoft level of 300. And it's really close to that, which, by the way, is equivalent to the 350 level in the Qs in my mind, which is equivalent to the 440 level in the SPYs in my mind. These are key levels for bulls to try to recapture if they're going to regain some control of this market. And Microsoft is showing you that it's one of the most relatively strong because it's back at it already, whereas the others are still, you know, a little bit of ways away. I guess the SPYs are kind of right there, but the Qs and Apple are still a little ways away. So I do like Microsoft on a close above 300 bucks. So I'm going to continue to keep that one on my radar for tomorrow, Robert, for sure. Next from DJ, if you're in a position that breaks out and is extended into no man's land, how much do you usually trim? Do you approach these situations differently from your standard 50% sell at 1-to-1? And I see there's more to your question, but I'll start with that. So for the most part, I'm almost always trying to stick with that 50% at 1-to-1, and that's a risk management sale more than it is, you know, to make money. But most of the time, if I'm getting that 1-to-1 kick, the stock is not going to be super extended into no man's land because I wouldn't have bought a stock that was super extended into no man's land to begin with, for the most part. So I'll probably, if I'm seeing a stock that's becoming very extended to the upside, though, I think this is more your question, I am going to be a little bit more aggressive in taking stock off. And like I said in the morning meeting today, I was talking about exiting Apache and Oxy. The only times I'm really, if I've got stock that looks great on the daily chart and I'm well in the money on it and it's really trending with me, I, for the most part, never want to sell at least the last like 10 to 20% of the position. I want to try to hold that for the most part for as long as possible because that's where the real money is going to come from. So the only time I'm really trying to liquidate that stock is because it's either become extremely extended or because my trailing stop broke. And in the case of that, and most of the time, honestly, even if it's extremely extended, I still keep some. And I just say to myself, okay, I'm just going to be prepared to give back some open profit in it. And a lot of times that's easier than exiting and trying to rebuy. Because the problem with exiting and trying to rebuy extension, which is what I'm doing in Oxy and Apache right now, is that there's a chance I miss it. There's a chance that the pullback happens and I just don't execute it properly for whatever reason. There's a chance that the pullback doesn't even happen. It's just a time correction. This stock gives 2 more momentum days in a row and then time corrects well above where I sold. So I really do prefer to only liquidate the last bit of my stock because the trend is breaking. And that's like Microsoft, which I don't have a position in Microsoft right now. But Microsoft is definitely the longest hold of my career. I mean, I held Microsoft from 2014. I pretty much had a position straight in Microsoft from when Satya Nadella took over in 2014. The stock had a breakout, and then it went into a weekly uptrend that literally only ended during COVID here. I got stopped out, and then I actually rebought Microsoft on the day of the low, into the close, and then I was back in it for most of this run. And now it's kind of broken down a little bit, and I don't have a position in it again. But you'll never be able to catch a move like I did in Microsoft that becomes a multi-year hold just because I'm, following my swing trading rules on a weekly basis, and I'm utilizing some leverage. You'll never be able to catch a move on a stock that goes from $40 to $300 if you just exit the position. So I, for the most part, I'm only really looking to exit the remainder of my position when things are going really well, if either it's extremely extended or because my stop broke, my trailing stop broke. And even in that case, I, for the most part, prefer not to fully liquidate my position. But I'll become a little bit more aggressive in my selling because I understand degrees of extension, and I might consider liquidating the entire thing, which is what I did today. But I want back in. Let's just see what a time or price correction looks like if I get one for these stocks. So great question there, DJ. Let me read the second part of the question. If the same stock has a time correction, sets up nicely, will you re-add to your position even if it's at a higher price? Yeah, so if Apache and Oxy bull flag here above the price that I sold at, I probably will get back in at a higher price off kind of the new pattern that's kind of come back in. I don't prefer to do that, and that can be mentally difficult sometimes, mentally difficult doesn't necessarily, I'm not talking about the right or the wrong thing. Sometimes the right thing is to buy your stock back, but mentally you're like, oh God, I sold it $1 lower. I can't believe I'm buying it back at this price. That is a difficult thing to do for some of us, for me. But in theory, you should. If the setup is there, if it's no longer extended, if it's beautiful bull flag, moving average is caught up, you're looking for continuation, then you take your stock back. Stefan, who's been our big oil bull here, also saying that VAL and RIG are his favorites. My VAL alert actually went off today. 43.50 is the area that I'd look to buy for a breakout in VAL. My problem with this stock is it trades very thin for a $40 stock. Oftentimes has a very wide spread. And RIG is frustrating to me because I got shaken out on like one of these 2 days here, like $3.25. I was really trying to stick with this one, but the volatility pushed me out just for it to then rip right back up to the level. 380 is the real breakout level in RIG. If RIG can clear 380, it looks fantastic. My problem with RIG is it's so cheap that it doesn't move as well. And that's why I know that they're little different businesses. But I love Oxy and Apache. I love how they trade because they're expensive enough that they have good movements that can make me money, which RIG doesn't really give me. But they're liquid enough that I'm not fearful when I'm trading it or feel fearful about executing it, like I am a little bit with VAL. But we got to keep an eye on them because your ideas have been money recently, sir. So congratulations to you, Stefan. Great job on your own trading recently, and great job helping out the team. I love it. Cool. Robert here, I think, asking about SoFi. SoFi was very disappointing. I thought this thing might struggle a little bit today, which it did. 1350 is a huge resistance level, and it was trading around there after hours yesterday. And I actually sold a bunch of stock at 1349 after hours yesterday, which I'm pretty pumped about. And then it gapped down solidly this morning. And I said in the morning meeting, I was like, guys, 1350 is the huge level for SoFi. I didn't love the numbers. I thought that the numbers were kind of just okay. I was happily surprised because I had a position on where it was trading after hours, but I liquidated a bunch of it. And I was like, I don't love these numbers. And then, they sold it off. I think it got downgraded by Bank of America or something like that. And then, so they sold it off by the time the market opened this morning, and then they sold it off all day. This is not a good candle. This is not a good candle. This is a kind of a failure here on that earnings report on higher volume. It's a negative Maribozu off resistance. So that 1350 is still the really big resistance level. But when you're saying for a day 2, I don't know if you even mean short or long, honestly, Robert, because it sold off all day today, so that would imply a day 2 could be to the downside, or it gapped up this morning, so it could imply that a day 2 is to the upside. I think you just got to know your levels. 1350 is the spot for SoFi to break. Stock was very heavy in front of it today. I'd be very surprised if all of a sudden SoFi is breaking it tomorrow, unless a whole ton of analysts come out and upgrade it and really defend it tomorrow. Maybe that can give it some juice. Or maybe the market itself can help. But this has not been the money one. The money one has been Upstart, which I think also had a weak day today. Oh, wow, it turned around. Upstart's the money one. This is the one that you want to be involved in. That if you want to talk about a great earnings report, that earning report was phenomenal. That was like one of the best earnings reports I feel like I've ever seen. And then even with that, they sold it off because of the market to fill the gap. We called out this buy off $100, and I don't have stock off of it, but I really hope some of you do. That thing just so good. And then it's back up to highs here, getting rejected at this 160 resistance. This is even a decent looking candle today. Upstart's the one. Much more difficult to trade than SoFi, just because of its expense and liquidity and spread and stuff. But this is the one you want to be involved in for sure. Gap. So yeah, so you had Nordstrom move really well on its earnings report. Macy's is a secondary. Looks like Gap caught a little bit of a bid today also. For the most part, it's a pretty sloppy, bearish looking daily chart despite that one strong bid. Steven asking me if I think Penn still has a trade for tomorrow. Yeah, I guess the trade's still there. It's not as clean because of today's action, I think, as it was coming into today. But you can still have an alert out for 5150. If it looks right through 5150, you could go for it. Larry asking about Open. Yeah, this Open Door, one of these growth stocks that IPO'd, and there was so much hype around this thing, and for the most part, this thing has just been trash. Bubble high here in February, tried to rebound a little bit. November came around, and all the growth stocks just got hit, and this thing just been trash. Look at this move from 25 down to $7. I don't think this thing looks good. I don't know what's going on here with this price action in these 2 trading sessions, but this was a very high volume failure of a day. Now it's building out a bearish consolidation down here. This is not the one that I want to go to. Thanks, Russ, for providing Tommy's question. And I do have a 5 o'clock cutoff today. I got a meeting, by the way. The old Derrick Huckleberry shakeout, Gabriel. All right, from Tommy. Would Spire Qs be a good buy if it pulls back tomorrow? I'm watching the hourly to look for a doji. So, yeah, so we're in a really tricky spot with the SPYs and the Qs right now. I think that they really need to prove themselves. Today was definitely a productive day. I spoke in the morning meeting about the potential of, 1, this is a broad lower high in this area and we work our way down. But 2, this is our first potential higher low that we had yesterday because the market tried to be weak. And now right away today, we gapped up, we acted well, Jerome Powell's comments were taken well, and we closed in such a way that really negated yesterday's candle. So there's a chance here that the SPYs just created a higher low, bulls are short time frame in control, and really start to work our way back up. And the IWM clears 207, which makes it a potential double bottom. There's still some proving that needs to be done, though. I need a SPY close above 440. I need a Q close above 350 to get them back to neutral, and I need the IWM close above 207 to get that more bullish. So while the SPYs are below 240, I think it's hard to have the conviction to buy pullbacks at this point. Because technically our bears are still in control on a little bit of a bigger picture here. So yeah, if you get that really good setup on your smaller time frame, like you're talking about here, and you want to go for it, sure. You know, if you're buying on the way up after a pullback, sure. But bigger picture here, to have real conviction on the market being able to move higher, we got to start by getting a close above 440 in the SPYs. Thanks for the question, Tommy, and thanks for posting it in the VTF, Russ. Terry Jones, Derrick, my man. If you have time, could I give my insight on GRIN, trying to put together a nice price target? Is it possible to see 40, or is this a stretch? Grinrod Shipping. I'm curious to know what they ship. The chart looks fantastic. Stock's at 27 right now. I feel like when you're making calls that big, you're talking about a stock that's at all-time highs, that's at 27.75, and you're trying to, you know, any price target that you give something that's at all-time highs here, unless it's really based off a technical pattern continuation, which maybe you could do a little bit of that, you know, 19 to 25 maybe, and kind of double that as a move would bring you up to 34. So that could be a potential profit target, or price target, I mean. But for the most part, when you got a stock that looks great like this and it's at all-time highs, any upside price target, unless it's based on fundamentals, is just going to be conjecture. And I don't know anything about this company to tell you anything about their fundamentals. This type of thing, if you got stock, you want to maximize your reward, you don't know where it's going to go. It's at all-time highs. It could go to 30, it could go to 35, it could go to 40, it could go to 80. I have no idea, because it's at all-time highs. So you just want to try to have a strategy that enables you to maximize your reward while not giving back too much profit, which is what we call a trailing strategy. And you want to have rules around that, which my team and I has. So at this point, I would just try to ride this trend for as long as it'll take you, and raise that stop as you can appropriately based on the daily chart. And I hope you find yourself at 40 or beyond in a short period of time. So good luck with it, and great looking chart. Thanks for bringing it up. From PMD Trading, thoughts on Citi price action and the daily bar post. Raise your comments. Interesting. So I had financials off my radar today for the most part, which I said that in the morning meeting because I didn't like their relative weakness. But then at one point early on in the day, I thought that these looked good on an intraday chart. I'm just starting with the XLF here before I look at any more kind of individual stocks here. So it's still weak, and now it's kind of back into the ADMA. So the XLF itself does not look great to me. Citi, that's a great looking candle though. And I don't know what I'm missing on Citi, and I missed the Fraser comments that you're referring to, so I'm not really sure what's going on with that either, to be totally honest with you. But you gotta love this Citi move on this candle, on this volume. There's definitely room off a candle like this, I think, for Citi to bounce back to $63. The question is, can it do it independently without the XLF? And the XLF, I don't like how it looks right now. There was a time here when I thought this XLF was getting really interesting looking into the end of January and the beginning of February, right in here. And then this thing just ended up, you know, totally kind of breaking down. First earlier than that, we had pretty weak earnings reports from these financial companies, and now they're just kind of in this big trend. Big range. So I don't like the price action from the XLF, but Citi specifically, I do like. Oversold with that kind of candle coming in. Just take a look at some of these other ones. Wells Fargo had been a leader here, even though it's my least favorite bank. And that's still above 50, which is okay, but it's not a great looking chart. Bank of America and JP Morgan are traditionally my favorite two banks to trade. This Bank of America chart looks terrible. Inside day, though. Maybe the inside day and up can negate this negative Maribozu and start to wake up a little bit. The JP Morgan chart also looks awful. It's extended the downside, had high volume yesterday, inside day today. So same thing. Maybe you get an inside day and up, then gets back above 140, negates this candle, and you can start a bounce back here. But a bounce back to where? The reward seems so limiting on JP Morgan right now. Bounce back to maybe 46. So I actually think from a charting perspective, this Citi looks best based on whatever happened that created this volume today and kind of created this move. I love this negative to positive, the way that they brought this back. So I would expect for this thing to be able to kind of give some follow through. And I apologize that I don't have the full story there on the stock with what happened. Russian billionaire Usmanov's mega yacht seized by Germans. Uh-oh. Tell ya, watch out for Putin to get possibly assassinated internally at this point. Keeps doing things like that. He's going to start upsetting a lot of other powerful people in Russia. He's the most powerful, but he's not the only powerful person there. Terry Jones on a follow-up on HPQ. A strong day for this. HPE, someone had brought up in the morning meeting today. I know that they obviously trade together, and that acted really well. Broke that 16-quarter gap. And I apologize because whoever brought it up in the morning meeting, I think I said I didn't like it. And it traded really well. HPQ traded really well also. I just think that the big picture of the chart, though, is really sloppy. I guess if you look at a weekly, it'll probably look bullish. Yeah, the weekly actually looks decently bullish. Weekly's building out a nice little bull flag. Daily chart, while it's in the mid portion of what is creating that weekly bull flag, I think is sloppy. But it's the weekly chart, I think, has Hewlett-Packard actually worth watching. So keep it on the radar there, Terry. Looks okay. From Edwin, how do you manage a trailing stop by percentage or points? Neither. And how far do you keep it away from the current price? Sure. So I speak to people who are sometimes interested in becoming professional traders, and I like to ask them questions about the trading that they've been doing in their retail account, particularly risk management questions. And I get from people all the time about how they trail. And I know that certain brokers, like I think Thinkorswim, has like a functionality in their software that can let you trail just by a certain percentage or by a certain amount. So I hate that. I really don't like that. I want to be trailing based on the information that the stock is telling me, not based on a random number, not based on an amount that's important to me, not based on a random percentage. I want to be I want the stock to tell me what's important to it. So I trail based on pivot points. So I have 3 rules for trailing. I'm not going to be able to get into all of them in today's afternoon meeting because it's one of my training program classes and it's like an hour-plus class. But basically, I trail based on pivot points. But I only actually will raise my stop to that pivot point if the ADMA is at least that price, so it's not extended, the pivot is not extended, and a new high has come in, which indicates trend continuation. But pivot points are important technically to the market because a pivot point is a spot where buyers took control from sellers or sellers took control from buyers. So that is the short answer, Edwin, on how I trail. And if you want to learn more, get involved with the team. But I definitely don't do it just based on a certain amount of percentages or points. Tesla's down 10 after the close. It's down 8 after the close now. Could just be volatility. Yeah, Gabriel's saying Zillow looks better than open. I actually looked at this Zillow recently, and I thought it was starting to look a little bit better, but still sloppy. Maybe if this Zillow can start closing above 65 again, it'll start looking good. I think they finally got that disaster off their books of. Can you imagine Zillow owning all that real estate and in like the hottest real estate market of all time, selling their properties at an average loss of $25,000 per property? That's like impressive, really impressive. Cool. Last question here is going to be from DJ, and I got to jump because I got a 5 o'clock. Do you put any shred of conviction towards shooting stars, hammers, other key candle patterns if they are low volume? Can they pretty much be neglected without volume, or are they at least worth noting? They're worth noting. Volume is confirmation. So when we don't have volume, it just means lower probability of success. But it's definitely something I pay attention to, but I really like the volume to be there because then I have a higher probability of success. And the higher the probability of success, the more I'm going to like the trade. All right, gang. So I don't know about you guys. Not a fantastic day for me. I was able to still actually be positive, but mainly because some of my swings acted well. My day trading, I just felt really off today, which is what it is. I took a day off yesterday, and I guess that's what I get for taking an actual vacation day, because I almost never do that. So we'll see. Interesting day here. The market's setting up in such a way where maybe we're setting up for that break of 440 in the market, which could get us to being a good bit more bullish. And I will see everybody tomorrow morning. So have a great night.